In today's video, I'm going to teach you how to properly use volume. A lot of beginners think that horizontal volume is the best way to kind of predict where price is going to break out or maybe consolidate, but I'm here to actually show you a better way to use volume. That is by using not horizontal volume, but vertical volume. And don't worry, I'll be showing you all the steps throughout this video. It's going to increase your trading and it's going to make you a much better trader. So make sure you tune in, watch this whole video because there's going to be some real sauce into this video. As always, if you want to learn about stock market, crypto market, or doing a account trade with me live every single day, the links will be down below. In this video, I'll drop a 20% off coupon for anybody who wants to join. It'll be only probably open for the first week that this video is on. So make sure you hurry up, get in there, join the Positive Money community, and come make money with us. As well, leave a like, comment, subscribe, do all those things, and let's get straight into the video. So here's a chart of simply the S&P 500 on a 5 minute. Let's first talk about kind of the volume that everybody's familiar with. Those are going to be this indicator right here. So we go to write in volume. You write in just a regular volume indicator. What do you see? You see these candlesticks here. And all traders may be like, well, if you see some kind of bull flag or something and the volume is increasing, you want to enter that trade because it's showing you a strong breakout type of deal. And then, we kind of all have heard that. And it is kind of true, but realistically, guys, it's really not that very serious because you might notice with the stock market, you'll notice a very trend. Over the first hour of the market, you'll see a lot of volume down here. And then through the day, it kind of just dips until we hit power hour. And then power hour here, let me show you guys here that the power hour, the volume increases. Regardless of whether the market is going up or down, you always seem to have this pattern. So a lot of volume in the first hour, which makes sense. We call the first 30 minutes of the market, the first hour of the market, and then we call power hour. And then midday is much slower. If we go to the next day, what do you see? Good amount of volume. Here it actually is a little skewed because we had all this volume from the FOMC meeting. But here, let's go here. All the volume, then kind of volume stays flat to lowering, and then eventually the last hour of the day or so goes up. So this volume actually, I don't even trade with it. Yes, I've talked about it in the past and I've mentioned it so the beginners know kind of how to see it, but I don't see this volume as being extremely important. So I never have this on. And if you ever trade with me live, if you ever join my streams, if you ever, watch any of my charting, it's extremely rare that I will have this volume up. And the reasoning being is because this volume just simply doesn't really do much for me. Now I use a different type of volume. I will go here and I would use two different types of volume. One is going to be called the fixed range volume profile, and the other one is going to be the session volume. So we're going to be session and then session volume profile. Let's a little hard it, and then boom, here it is the session volume profile. What does this do? This will show you the volume profile of the current session, the current market hours, right? Whatever the day is, that single day is, and then you go prior. You see here, day prior, and so on and so forth. And let's first talk about this. What's it showing you? So these blue bars here, these blue and yellow bars, blue bars is buying pressure. How much of that volume actually is people buying? The yellow one is people selling, or the selling pressure, the bear pressure, whatever you want to call it. As you guys can see here, so usually the blue here overtook most of the yellow. As you see, there's more blue. Here's a little bit selling. But for the most part, the blue was overtaking. That's why you see this push higher. Now, the bigger the bar, the more volume was traded. And you might see this, right? This is the pre-market hours, and of course, there's going to be less volume. And you see how this is highlighted right here. This means that 70% of the volume of today's range was traded within these bars. Now we can adjust this, and we will adjust this because this is about 24 bars, I believe, if I remember correctly. Yeah, right here, 24 rows. But we actually want to know a little more than this. Now, this red line here is what we call the volume point of control, or the most traded of the day, most volume traded for the day, and often will act as support or resistance level, right? So when I first go to settings and I'll show you guys, here's the volume up and down. This is the value area volume. It's fine at 70, but I like to know row sizes. I like to be more specific, and right at 24, I will set this to 100. And you can see it adjusts this. So now it takes us 24 and then divides them until we get 100 bars. The reason we do this is so we can be more specific on exactly where the volume, is or is not. For example, here we see that there's this very low things of volume. You can kind of have it in there, and then you can see how this kind of affects the market. Here again, very low volume, and if we drag this in, do we kind of see a pattern here? We see this resistance area turn support. We see this resistance area turn support, right? We kind of starting to see a pattern here. This low area of volume. Guess what happened, right? Broke through support-wise, went up, right? We can kind of keep drawing this. Now, that is what we call volume imbalances when there's low volume nodes as well, and those can be used for support and resistance area. Now, if you had just a 24, it'll be much harder to look to find those, because if you have a wider range, it just will not improve your trading. So I like to mark those to kind of understand where those areas are, as well as understand where the point of control is. This point of control will often act as a support or resistance level. As you guys can see, it acted here. This was kind of crazy. If we go here, see resistance, and then it kind of chops through resistance, support, resistance. Now, will this work 100% of the times? Of course, it's not. Here you can see the support, and then here again, all those sort of deals. Here you can see the low volume here holding a support, this low volume up here holding as resistance. So you can see how we're using this. Unlike the horizontal volume that you're kind of trying to guess where the breakout area is, when realistically you don't know if it's when you're breaking, if it's people selling it, that's why you're getting an increase of volume and it will fail that breakout, or you're getting buyers that are actually buying it and the breakout will work through. Now, this will always adjust throughout the day. So throughout the day, this volume profile is currently here. But guess what? If we wanted to, if the market was only open until this time, the volume profile will be different and those levels will be adjusted. So let me show you a quick example. We're going to close this, and then remember how I showed you guys I had the fixed range volume profile. Now with this, if you click on it, you can mark a certain range. So let's say you mark 9:30 open. So you mark from here to only to here. Now we'll get the volume point of control there, and then we'll adjust it. You can click right here, settings, value area, roll size, change this to 100. We hit the 100, and bang, 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 bang. There it is. You can also adjust the time frame, and you will adjust based on the time frame. And then you can see how here is where you have the low volume. You dip in here. You can also call this potentially an imbalance. I like to think of it as an imbalance as well. There's low volume, market touches it, feels that imbalance, and kind of moves up. Big areas of volume is obviously we're going to have a lot of prices touch those levels much more often because there's more volume and the bulls and bears are kind of fighting. And you can see you can adjust this too. Now we can also use this on an hourly time frame or any time frame that we choose to. As you can see here, the hourly right here held as a support, and then you hit those levels in the next few hours. The low volume imbalances holding those, and of course now we would have more data here, but we only had for a certain range. Now let's change the range. I actually have mine favorited right here, and already with those settings that I like. You can actually go right in here, and if you go to the bottom, you can just use this as well. This is easier. And let's say we want to from 7 to here, and then here is our volume by controls, and then this area, this blue line, and this top line is that range that we talked about, that value area range that we talked about. And here you can see, you can mark all your low imbalances. As you can see here, you can actually see price still moving as it's after hours. This low area here that was previously resistance is kind of turning into support by using those. Now, do you trade only based on volume profile and a VPOC, which will be this value point of control? No, you don't. You combine this volume in combination with your technical analysis, your other setups, your support, your supply and demand, your candlestick patterns, your indicators, whatever you're using. You add this tool to it. It's a nice clean tool that can be used on all time frames, which I like to use. Now let's go to a trade that actually I took today. This is MD trade. So let's go to the time frame I actually took it in, 5 minutes. And let's clean up this chart. Let's add volume profile index from, since I will just do the session, we can just do session volume profile. Click that in, and we're getting here the session volume profile. Now, if you were in the Discord, shame on you, you need to be in the Discord. We took a trade first on a short position, which was just in the beginning of the day on this bounce here, and then rejection, right? But the secondary trade we took was actually based off this low imbalance here. As you can see here, this session, 2 sessions, low imbalances, you come down, you wick below it, you close up above it, and then it turns around to trade. And my entry was on this secondary level right here, right above the VPOC. So trade was looking something like this. Now, this would have been the best entry, but I did miss this trade. This was the second best trade. So entry right here, stop loss pretty much below the VPOC, a little bit lower just to give it time, and enter this as long, and then take your PTs at your next resistance area, your next low zones area. And then you can see here, the price was fairly traded today between bulls and bears compared to the rest of the market, and went right through it. Now let's look here. This previous day, right, price rallies, hits the imbalances, comes down, hits the other imbalances, runs up, and so on and so forth. You can see here, price again, hit these levels. This imbalance right here where you see how this volume, this is what's important here to look. high volume, right? Then dip and then high volume again, and look for those pockets. So we're gonna look for these pockets right here, this type of pockets. See, even the next day worked as a resistance. So that's why they're very, very important. You have to look for these pockets, and then so on and so forth, and then you have this volume balance. Now, if you go to the daily and stick something like the daily, right? We remove all the drawings. Let's use our fixed range, and we'll say we want to take it from the gap up to currently. We can see where the VPOC is. Where is the VPOC on the daily? This is important. The VPOC on the daily is at the bottom here, holding a support. The most volume traded is at this bottom support here. Then where are the pockets? Right here, right? That's where we bounced. It's previous today's support. The lower volume on the upper bands right here, essentially going to be a support, right? And then this is where 70% of range has been. It's between these two blue lines. And you can do this on pretty much anything, right? So let's say we go to a stock such as Tesla. Let's take Tesla for an account. Let's say we take Tesla from, and we're here on the daily, we'll take it from, here, there's this saved right here, from this whole range that's been here for the past year, right? Now, where could we expect some resistance being played? So first of all, our first resistance would have been around this area, which guess what we did? We gapped up above it due to earnings, right? So we can expect if this were to come down, where we're along it, right? Where we're along it, right here, right on this daily. Now, where's the next areas I'm going to be expecting? Right where we currently have rejected. Take this rectangle. Right here, you have low volume. This is going to be your next area, right? Where we're like to long it, it's going to be this area. And then eventually, if you want lower, you would adjust, but those kind of lower areas as well, right? So you have to keep in mind where are those dips in volume. And you'll see lines up a lot of times with major support resistance zone. A lot of times with gaps like we're seeing here, imbalances in the market, because there's not a lot of volume. And remember, what is the market? The market is just a big order book that's trying to balance between the buyers and the sellers. So whenever there's an imbalance in the market tends to go back to the imbalance, feel that imbalance, and then move up to correct the next direction. So the market is efficient and inefficient. It's inefficient because it creates this type of imbalances, but then it's efficient because it tends to, not all the time, it tends to come, fill those up, and then move on. So I hope this video helped. Hope you stop using that bottom volume that you may see at the bottom. Try out this horizontal volume. Let me know how it goes. Learn in the comments, say this was great, this was terrible. Learn in the comments. Again, this is not a tool that's used on its own. It's a great tool to know, but it's never used on its own. And as always, peace.